Welcome to The Explainer. Today, we are diving into one of the most dramatic power shifts in modern tech. We're talking about Intel, the industrial incumbent, versus NVIDIA, the AI sovereign. It's a story of how their paths flew apart in the most spectacular way, and how they're now coming back together in a move that could change everything.
So, let's just get right to the heart of it. How on earth did this happen? How did one chip giant become nearly 20 times bigger than its rival in just 5 short years? I mean, this isn't just a small change, it's a complete redrawing of the entire tech landscape.
And the answer, well, it's pretty brutal when you look at it this way. The market has spoken, loud and clear. NVIDIA's stock performance is just insane. We're talking up over 1,300%. Meanwhile, Intel's value actually went down. That incredible gap tells you everything you need to know. The world decided to bet big on NVIDIA's AI-first vision.
Okay, so what was the driving force behind this massive split? It wasn't just one thing. It really boils down to two completely different philosophies, two different worldviews about how to build the future of technology. And these two philosophies sent our giants down two very, very different roads. So on one side, you've got Intel, the industrial heavyweight, the national champion of manufacturing. On the other, you've got NVIDIA, the agile designer, basically building the operating system for the entire AI revolution. Intel's whole game is about designing and physically making its chips. NVIDIA? They focus 100% on just the design part. You see, Intel is what's called an integrated device manufacturer, or IDM. That just means they do everything themselves. They dream up the chip, and then they build it in their own multi-billion-dollar factories, their fabs. It's a strategy that's all about total control over manufacturing, from start to finish.
NVIDIA, on the other hand, plays the game completely differently. They're fabless, which means, well, no factories. They pour all of their brainpower into designing the world's best chips and, this is key, the software that makes them sing. We're talking about CUDA, their software platform that creates this incredible competitive moat. It locks developers into their ecosystem. Then they let partners like TSMC handle the unbelievably expensive job of actually making the things.
All right, let's follow the money, because these philosophies sound interesting, but how do they actually play out on the bottom line? In business, the numbers always tell the real story. And wow, what a story it is. You know, back in 2020, Intel's revenue was 7 times bigger than NVIDIA's. 7 times. But just look at that crossover point in 2024. The AI boom hit and NVIDIA's revenue went vertical. By 2025, they're on track to be 2.5 times bigger than Intel. The student completely lapped the master.
But making money is one thing, keeping it is another. And this is where the power of NVIDIA's model just smacks you in the face. With no factories to run, their business looks more like a high-end software company. 75% gross margins. That's more than double Intel's. So let's make it simple. For every dollar NVIDIA makes, they keep almost 56 cents as pure profit. Intel, they're just fighting to break even.
And this right here really shows you the pressure Intel is under. They have to spend a whopping 26 cents of every single dollar they earn on R&D just to try and catch up in manufacturing technology. Now, NVIDIA spends a ton on R&D too, but because their revenue is so huge, it's a much smaller piece of the pie. Here's the bottom line. Survival is costing Intel way more than dominance is costing NVIDIA.
And this is the CapEx burden. We're talking about the raw, eye-watering cost of building factories and buying the insanely expensive equipment that goes inside them. This is a bill for tens of billions of dollars that Intel has to pay, while NVIDIA, with its fabless model, pays pretty much nothing.
Okay, so you take the revenue, the profits, the R&D, the capex, you stir it all together, and it all comes down to this one number. This is the ultimate health metric for any company. So what is it?
It's Intel's projected free cash flow. That's the actual cash a company has left over after paying for everything. It is the absolute lifeblood of a business. And while NVIDIA is generating a torrent of it, over $60 billion, Intel is actually burning through cash just to fund its turnaround plan.
So what does this mean for investors? Well, it's a huge deal. Intel had to cut its dividend. They're asking shareholders to be patient and wait for the plan to work. NVIDIA, on the other hand, is in what you'd call reward mode. They're using that mountain of cash to buy back their own stock, which directly rewards investors. And at the end of the day, it leaves these two companies in totally different financial worlds. NVIDIA is sitting on a fortress of a balance sheet, with more cash than debt. Intel, well, they're taking on a lot of debt to fund their comeback, which, just puts them in a riskier position.
Okay, so after 5 years of this historic split, just when you think you know how this story ends, it takes a completely unexpected turn, a plot twist that could reshape the entire industry all over again.
Right when it looked like their paths were just going to get further and further apart, something incredible happens. Instead of continuing the fight, these two bitter rivals decide to build a bridge. In late 2025, NVIDIA makes a stunning move, a $5 billion investment in Intel's factory business. Now, for NVIDIA, this is a brilliant play. It diversifies their supply chain and gets them some political points. But for Intel, it's a lifeline. It's a huge injection of cash. And maybe even more important, it's a massive vote of confidence in their manufacturing dream. So what do we get out of this partnership? Well, the centerpiece is something called the AI PC. The idea is to bake NVIDIA's killer graphics technology right into Intel's CPUs and have the whole thing built in Intel's factories. The goal here is to stop competing head-to-head and start building one unified, powerful AI platform for all of our computers. So, with this new alliance on the horizon, what in the world does this mean for an investor trying to figure out where to put their money today? Here's where it gets really, really interesting. It all comes down to valuation. With NVIDIA, you're paying a massive premium. You're paying for perfection, for flawless execution, for incredible growth. With Intel, you're getting a deep, deep discount. You're basically buying the company for the value of its buildings. You're either paying for perfection or buying a turnaround story that the market is still very skeptical about. And of course, each one comes with its own flavor of risk. For Intel, the big risk is, what if this turnaround doesn't work? What if they keep burning cash? For NVIDIA, the risk is this an AI bubble? What happens if that explosive spending slows down and that sky-high valuation comes back to earth? So in the end, the choice really boils down to what kind of investor you are. Are you a value contrarian? Do you like betting on a high-risk, high-reward comeback for a national champion? Or are you a growth investor? Someone who believes the AI revolution is just getting started and you're willing to pay up for that momentum.
And that brings us to our final thought. The split between Intel and NVIDIA was the story of the last 5 years. But now their futures are connected, and it's this new convergence that is probably going to define the next 5 years, not just for them, but for all of us.